Well, there is, of course, a lot of uncertainty in ag today. Geopolitical events, financial hurdles, all influencing how many producers navigate operational decisions, including the farmland market. Well, Howard Halderman with the American Society of Farm Managers and Rural Appraisers joins us now for an update. Howard, always a pleasure. So I thought we'd start by asking you what you're seeing with farmland values across the Corn Belt so far this year.
Great question, Suzanne. We're coming off last year, which nominally was an all-time record land sale value for us in the Eastern Corn Belt. And we started this year basically increasing and seeing land values creep up a little higher as we started out January and February. Technically, to date, we're setting an all-time record in terms of nominal sale value. But I will tell you, the last month, we've really seen softening. And the market is starting to trend down a little bit. And I think a lot of that has to do with some of the chaotic events across the globe.
Yeah, I was going to ask you, when we look at some of these factors that are having an influence on this pricing, I would assume it's different, both locally and then, of course, globally.
It is. A lot of times you'll see in the Eastern Corn Belt, Indiana, Ohio, Michigan, we have some factors that Western Corn Belt doesn't have due to the halo effect from other industries, residential expansion, manufacturing, maybe more data centers, and that generates a lot of 1031 exchange money that could be going into farmland and supporting land values or driving them a little bit higher than what you might expect. So there are localized influences, but there's also global influences. And I would suggest to you the war in Iran is certainly one of those global influences that is creating some chaos. And you saw nitrogen prices for corn, you see that crop right there, go up 30, 40, 60% in some instances due to the close of the Strait of Hormuz. So when that happens, that basically leads to caution in the marketplace. And so I think that's really what we're seeing drag values a little softening here in March.
Well, I'm mentioning that, of course, globally and what we're seeing in Iran. But what about USDA bridge payments? Are you seeing those have an influence
Suzanne,
as far as
I
buyers?
lost your sound.
Oh, nope. There we go. Okay. Hi. There we got you back. I was going to ask you, Howard, of course, we talk about what's happening in the Middle East, but USDA bridge payments that have been given out to producers, a lot of them say they're going to be paying off debt. But are you seeing those being put to use as far as land?
I do believe a lot of it's going toward paying off debt, and that's reducing operating lines that may be carried over from last year or just making the debt payments they normally have regularly scheduled. I don't see a lot of that being plowed into farmland right now. In fact, I see some ag lenders probably saying maybe now's the time not to look at buying additional land and to kind of take your foot off the gas in terms of capital expenditures.
All right. General feel right now, as you look at the marketplace and where we're headed, what are your thoughts before we let you go?
You know, I think with the input costs remaining high, combined with interest rates now maybe not going down a couple more quarter point moves, you start to feel like I think the market will continue to be a little soft, stable to soft throughout the rest of 2026. Hard to predict, but I really think that that's where we'll see it. The key will be supply. We've been in an environment with very few farms for sale. And as long as that supply remains low, I think that'll be supportive of land values. And I think that will help us throughout the rest of the year keep these values at close to an all-time high level.
Always great analysis. Howard, thank you for your time today and for joining us. Howard Halderman with the American Society of Farm Managers and Rural Appraisers.